Can the West ever hope to wean themselves off Russian energy? And what are the consequences if they can't? That's what I'm asking my returning guest on GoldCore TV this week, energy expert Steve Angelo of SRSroccoReport. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com. Your precious metals experts. Steve Angelo, welcome back to GoldCore TV.
Dave, great to be here. Lots to talk about.
Indeed, there is. We spoke last about 3 or 4 months ago, and at that stage, we were talking about the energy cliff, and you were predicting that we were going to fall off this energy cliff at a stage in the future, a number of years out. We've seen some significant developments in the world that have had a massive impact on energy supplies and energy supply lines. Are you rethinking your date at which we might come to that energy cliff?
Yeah, Dave, my original assessment, it was about 2025. And when I say the energy cliff, it's not going to be like it's going to fall, very quickly. There will be cliff-like declines. Then we would see energy production consumption stabilize, and then you have another cliff-like decline. And I said that my original analysis is 2025. Now, we were getting into trouble already before the Russian-Ukraine war. This was happening last year, and the reason why that was happening had to do with green energy underperforming in Europe. And yes, Europe is the weakest link for natural gas in the world because it consumes and imports the most natural gas,
right,
as a region. And so when there's problems with the wind underperforming, either in the summer, and then it's so cold in the winter that they have to burn more natural gas, it draws down the inventories. And then guess what? We're down. Europe is down to 26% of its capacity. Now, the same time last year, 2021, it was 30%. The year before that, it was 55%. So now
25% of its capacity for production.
Oh no,
generation.
Actually, right now, Europe's natural gas inventories.
Okay, yeah, so our inventories have fallen
to 26%. They're 26% full.
Okay.
Now, the same time last year, they were 30% full. I thought we would see more of a decline, but it wasn't as cold compared to last year. They burned more. It was a little bit colder, but the cold season is not yet over yet. So we don't know if we're going to see a continued drawdown. But in 2020, it was 55%. At the same period. It was more than half full. So now, if there's any problems with getting gas from Russia, what would happen is they're not going to be able to fill up this inventory before the winter hits. Yeah. And if you have a very warm summer, then you're going to burn even more natural gas to cool. So it's going to be very interesting in the next 4 to 6 months to see what the inventories are. But I still think the Russian-Ukraine war has put a spotlight on the energy dynamics, and I think it sped the process up. So the energy cliff, we could start seeing it even sooner than 2025.
Because one of the major things is the massive dependence that Europe has on natural gas coming in from Russia. That's the bottom line of this. We're not, as a continent, producing much, if any, natural gas in comparison to what we actually have to import. Correct?
Let me give you an example. If you take out production, that's Norway and all the countries, producing natural gas, and then you add the production and you minus the consumption, and my simple number is in 2020, Europe had to import 31 billion cubic feet a day of natural gas.
Wow.
As a region. Asia came in second at about 20. Now, the only country that has the region that has the most surplus is Russia and the CIS states. and they have 24 billion cubic feet a day of surplus. So because Russia is very close to Europe, it's all pipelines. A lot of that natural gas goes to Europe. And so
it's the cheapest way. It's the cheapest natural gas to import because it's the closest and the pipelines are there.
That's right, because producing LNG is very expensive. You've got to manufacture, build this very expensive processing facility to make cold LNG. Then you've got to spend $250 million on an LNG carrier, twice what it cost for the large oil tankers. And then you have to have a $500 billion import facility to make it back into natural gas because it's cold, liquefied. So that's very expensive. And Germany had the Nord 2 ready to go. And so now, due to U.S. policy in NATO and in the West, they have right now, they're not going forward with the Nord 2, but that would be the cheapest natural gas that Germany could get, would be through the Nord 2 pipeline.
So let's just put it in perspective, and I'll call up this chart of yours that'll give us an idea of exactly how dependent that Europe is on imports from Russia.
49, almost 50% of Europe's, Russia's exports of oil, almost 50% come from Russia. And 74%, or almost 3/4 of Russia's gas exports go to Europe.
Wow.
And then about 1/3 of Russia's coal exports go to Europe. So the big problem, if you look at that chart, is the natural gas. And you can't make that up. Even though the world is going to be increasing more natural gas, it's not enough to offset this dynamic right here. So that's the problem, Dave. So you hear Germany's going to build, they're going to wean off of Russia's natural gas. They import about 80 billion cubic meters of natural gas from Russia. They say they've got these 2 LNG facilities they're going to build so they can import LNG away from Russia, from the United States or from Qatar. The problem is, if they get those built, and one has been in the works for 5 years and it hasn't gone anywhere. Now they've got a political will to start getting this one LNG facility. But if they get 2 of these LNG built, it's 2.5 years. And then when they get that built, they can cut that would be 24% of what they're importing from Russia. So it's still not going to solve their problem. So there's a lot of political BS going on right now that if you look at the numbers, there's really no way for Europe to wean itself off Russia. And if they did, on a pretty significant way, the European economy would go into a depression. It's as simple as that, 101. Without energy, you don't have an economy. And that's the problem that the world doesn't realize. Energy is the number one driver of the economy. And when you don't have the energy, you don't have an economy.
Because as well as everything else, it's as we said, it's the cheapest way to get it. So if you did attempt to wean yourself off Russian natural gas, it's going to cost a hell of a lot more. So it's going to have massive inflationary impacts and implications as well. So another nail in the coffin for the European economy.
Yeah, and I believe there's another chart that shows the U.S. Natural gas exports and Russia. Now, the chart shows the LNG exported by each terminal in the United States. And that's total now. That's not just to Europe. A lot goes to South America. It goes to Asia. Asia has become a big importer of LNG. Now, this chart shows you that the U.S. was exporting about 10 billion cubic feet a day of LNG. Russia's was 25 billion total. That's pipeline, that's LNG, most of it's pipeline. So there's no way that the U.S. can ramp up enough to offset that. That's 2.5 times. So we need to really understand these dynamics here. And I think when the dust settles, Europe is going to have to make some serious decisions, because they're only right now, the only way that their economy can survive really is not on green energy. It's Russian, a lot of the Russian energy imported, whether it's oil, natural gas, or coal.
And there's not much of a political or moral will to continue to do that, or at least be seen to doing that, because effectively it's playing into Russian, or playing into Putin's hands. And most recently, over the last couple of days, Russians have initially demanded that their natural gas be paid for in rubles. Now they put a time frame of the 1st of April on that. They backed off that a little bit. Germany and the G7 basically said that they wouldn't, and they've backed off that demand to say that this is something that they're planning on phasing in over the next while. That's a significant development, financially, geopolitically, and will have massive implications for financial markets as well as energy markets. Do you agree with that?
Yes. You see, the problem is the U.S. is the reserve currency, and I did a post on this. The deficits have been funded by issuing treasuries. And that's where the increase of the M2 money supply has come from. If you look at the increase of the M2 money supply in the United States from 2000 to 2021, and you look at the deficits that we've had, and you add up the deficits and you look at the increase in the M2 money supply, it's about 17 trillion. Mm-hmm. They're about, plus or minus a little bit. And so the world is starting to realize that they're getting tired of the US dollar being the reserve currency. And we're seeing also that Saudi Arabia wants to sell its oil to China in yuan. So we're seeing more of this. And now with the Russian sanctions from the United States and Western countries on the dollar. Mm. So Russia said, well, let's go ahead now and start accepting natural gas and other commodities, other energy in rubles. Because, we saw the ruble collapse right after the war, all these sanctions, and the ruble just went into a free fall. But now it's back up to where it was.
It's starting to rally. It's starting to rally, yeah. Because you've seen the weaponization, basically, of financial markets, and particularly of dollar-denominated assets. And one of the things that Russia had been doing over the last number of years is reducing down a lot of its dollar assets in the form of treasury holdings. Increasing their holdings of gold. Some might say, this has been part of a long-term plan, and the invasion of Ukraine is only one part of it. But what's happened now with the weaponization of financial assets is it's made the Middle East and it's made the Far East look at their dollar-denominated assets and looked at the US dollar being the reserve currency and kind of said, well, there's a risk here for us as well in holding these as reserves.
That's correct, because all the treasury is a promise to pay. And you have to have economic activity to pay back that treasury, the 20-year, the 30-year, the 10-year, whatever it is. And so I think as time goes on, we're going to see currencies now actually being backed more by their commodities or energy, which is what they kind of should be. Mm. And so this is, will Germany and Europe say no to rubles? Well, if Putin does start shutting down some of the supply, they're going to feel it very quickly. And again, there's no way around it. There's no way to offset such large import of energy from Russia. Mm-hmm. And so if they don't pay in rubles, there's also these long-term contracts would be null and void. And those long-term contracts are spot prices that are much lower, because as of today, Dave, I looked at the Dutch TTF natural gas, it's $39. The Korean LNG, Japan LNG is 34, and the US same natural gas a unit is $5.76.
Yeah.
So So Europe is paying 6 to 7 times more than US, and Japan is paying 6 times. So if Russia does say that they want to be paid in rubles, or these contracts will be null and void, then they're going to have to pay the spot price, which I believe these long-term contracts are much lower.
And tell me about this. So natural gas in the States is between $5 and $6 at the moment, obviously, which is a fifth or sixth what it is here. In terms of the economic value of converting that to LNG and shipping it across the Atlantic to Europe and then converting it back from an LNG into natural gas, is that economic at the moment at this price differential?
Well, it is, because the price being paid in Asia and in Europe is much higher than the cost of what it takes to produce it. And that's a cost, but it takes a lot of energy to produce the LNG. And so again, Japan can't use it uses natural gas, but it doesn't produce natural gas. So it has to import LNG. And that's the only thing it can do. And it was paying between $8 to $10 for the unit of natural gas. Now it's paying over 30. So we see it's 3 times. But this is this has only been the last six months or so. And so we have no idea what these high prices are going to start thundering through the economy, as we've seen in fertilizer prices are going way up. But I think the issue is LNG. To me, my biggest thing is the falling energy return on investment of energy. That is the key to know, as the system, the empire is getting close to a peak and decline. As the energy return on investment falls, by making LNG, you're destroying natural gas. You're destroying the energy return on investment of natural gas, because all you're doing is spending energy to liquefy it. Then you got to spend
more energy to unliquefy it. Is that the word?
Yes.
Deliquefy.
Yeah. And that doesn't include the energy it took to construct these LNG facilities that run between $7 and $20 billion. It took a lot of energy to make all the materials and parts and to make that facility. Then you get the natural gas going into the facility, liquefying it. Then you've got this $250 million LNG huge tanker. Again, that's twice as much of an oil tanker. And then that uses fuel now.
Yeah, you're filling it full of fuel to bring it across the Atlantic or wherever it is that
because it burns fuel to ship the LNG, and then when it gets to the LNG import facility, that import facility it returns it back into natural gas. And so, yes, it's much cheaper to send natural gas through a pipeline, but a lot of countries can't do that because they don't have natural gas, so they can't get a pipeline to them. So again, a lot of Russia's natural gas is being sent cheaply through pipelines, and now Europe wants to go and say, we're going to go to LNG. Well, first of all, there's not a lot of growth. There is some growth, but not enough to offset Russia's imports of natural gas. And so, but then it's going to be much more expensive for the entire world to absorb this higher cost of producing natural gas.
Europe, Germany in particular, basically have their hands tied in this regard. Then they can't take a moral stance, or a political stance rather. They have to continue to purchase energy from Russia, and in particular natural gas.
Well, let me make this comparison. During World War II, Germany took over a lot of Europe, right? They took over a lot of the Western European countries, and they actually took their stockpiles of fuel to use to invade Russia. And that was one of the strategies, because Germany, even though it was producing synthetic diesel, it couldn't really ramp that up. So it needed to get the fuel. The fuel was the key to the war effort. Unfortunately, Germany was up against the United States. and the United States produced, I had a chart last time we were on, it was producing 70% of all the oil in the world in 1940.
Yes.
And it was exporting a lot of that energy to England and to other allies. And so it was the energy of the allies that beat the Axis, Germany, Italy, Japan.
Mm.
This time around, Russia holds the energy cards. Not Europe, not the United States. The United States is a big producer of oil and natural gas. It does export some of its natural gas, but it still imports a lot of oil because its refineries on the Gulf Coast are designed for a heavier oil. It can't use a lot of the light, tight natural oil that we get from shale. So we export a lot of that. So the tables now have flipped. Russia holds the energy cards, the West does not. During World War II, the US and the Allies held the energy cards. So this is a dynamic that at some point in time, the Europe is going to have to take a very deep look and to see where they really want to go, because there's a lot of political grandstanding here. If you just look at the numbers, Europe is highly dependent upon imports from Russia of a lot of energy sources, and it cannot make it up quick enough. And I believe the world is going to hit the energy cliff anyhow. But this current dynamic is just going to make the situation worse if Europe decides, or if Putin decides to cut exports because Europe will not pay in rubles. I think we're going to see much more volatility and higher prices moving forward.
So obviously, Europe is kind of painted into a corner in this regard. There's very little that they can do that doesn't result in higher prices. They can attempt to wean themselves off Russian energy, but that'll be done at significantly higher prices, which is going to be detrimental to the economy. We're talking very much about fossil fuels here. Is it a case that in reality we've got this deficit, this energy deficit that we have in Europe can only be made up by one of two things? One of them we've talked about before as being a little bit of a white elephant in the terms of the green energy. But the other one is nuclear. Is that a viable option for Europe? Obviously, we have nuclear power plants all over Europe, plenty of them, but we have had Germany in particular trying to wean themselves off nuclear at a time where it could be said that they should be doing the opposite.
Yes. Well, here's my stance on nuclear. I think nuclear is still very problematic. It's a very complex power system, and we still don't know what to do with a lot of the spent radioactive fuel, especially in the US. And then we've seen plenty of instances with Fukushima. It's a disaster, right? And so people can't even go back to Fukushima and live there. That town is still vacant. The issue is it's being used now, and I sent you the red chart. It's got the net electric generation from France. Now, if we look at this chart, I'm going to simplify it. It's March 2021 and March 2022. And this is the red is France's nuclear power generation. It fluctuates, but look at the right side. It's down to 30 gigawatts. Actually, I checked, it's below 30. It's at 29.7. It has dropped.
That's a 25% reduction in electricity generation in France in the space of a year.
Yes, and France has known to be a major or a pretty big exporter of power in Europe. Europe has counted on exports of electricity into various countries around France, but that's changed. And so when the issue is the EDF, which is France nuclear power company, that they have found 11 of their 56 nuclear power plants that have leak problems. So they've been shutting them down, and now I think they're finding more. And so I don't know how long it's going to take for them to bring those back online.
Mm-hmm.
But it's interesting. President Macron came out and said that they're going to add 6 new nuclear power plants by 2035. That's 14 years.
It's not tomorrow.
No. And here's what's funny.
Yeah.
They have the Flamanville 3. It's the 3rd nuclear reactor. There's 2 other Flamanvilles, 1 and 2. The 1 and 2 took 7 and 8 years to build. The Flamanville 3 was supposed to go online this year. It's being pushed back to the end of 2023. It's taken 15 years to build this thing. So, and the costs are 4 times more. And now with all the energy prices going up, the cost to do nuclear is going to be prohibitive. And if you look at the next chart, I think there's one chart that shows you the dynamics right now. And it basically, at this point in time, I looked at the numbers at 23:30, it looks like about midnight in France. They were importing 9,425 megawatts of power, and they were only exporting 204. And if you look at the little diagram on the right, you could see where it was coming from. It was coming from England, Spain, Italy, and Germany, and they were only exporting a little bit to Switzerland. So this is another dynamic now. These aging nuclear power plants, to continue running them. And let me tell you, one more piece of information. EDF is a financial disaster. According to the data I looked at, France's nuclear power company, from 2002 to 2007, that was the first bit of data I can find. Their free cash flow after their operation income and then their capital expenditures, they had 25 billion in free cash flow. But in 2008, it went negative. From 2008 to 2021, every year, their free cash flow has been negative. $51.4 billion in negative free cash flow. So
what's changed?
It's just the power that they're supplying isn't being priced high enough to maintain the system. And another thing, it's just more expensive now. The price of the new power plant is over, I think it's 12.3 billion euro. It's quadrupled what it was just 12, 15 years ago. So the prices of everything have gone up to produce these facilities. And so, a lot of nuclear is in trouble. We're going to still get power from it. So I think this is another factor that's playing into the European energy dynamics. That's the reason why electric prices are so high in Europe, because not only taxes, but it has to do with importing a lot of natural gas. And now we're seeing problems with France with their nuclear power facilities. So I haven't even seen this on the mainstream media. So it's going to be interesting to see how this is going to change. But again, when energy, Dave, is the number one driver of the economy, we have to understand where the energy comes from. And right now, Russia and the Middle East hold the energy cards. And actually, when it comes to natural gas, Russia holds the energy cards.
So we're looking at a situation in Europe that could be considered quite dire before we ever had any geopolitical tension, which then turned into an invasion of Ukraine and war on the continent of Europe. We had issues before that. We had declining production, declining reserves, not just in natural gas, across the board on fossil fuels and non-fossil fuels in terms of nuclear. So we had a deficit, and that deficit was growing. And then we encounter this problem. Is there a way out for Europe, or what's the conclusion that you're coming to with all of this?
Do you know what the way out is? The way out is simple. the central banks raise interest rates and destroy the economy
and kill demand.
That's the only way out. It's, Biden wants to, he wants to add to take off another 180 million barrels from the Strategic Petroleum Reserve in the U.S. We already did 50, and then now we're doing 30 more, and now he wants to do 180.
What size is that reserve? I mean, how long, if you're depleting the reserve, how long have you got?
Well, according to the data, the USPR is about 568 million barrels.
Okay.
If we're using about 20 million barrels a day. Mm-hmm. So you do simple math, it's 30 days maybe. If we didn't have any production. We still have production though. But the thing is, if we do that 180 million barrel, pull that out of the SPR, we're going to be at 390 million barrels. The last time we were there was 1984. And you see, politicians are using political grandstanding, and they're basically going into the piggy bank, the SPR, whether it's US or whether it's in Europe or in Asia. The SPR is a strategic reserve actually meant for wartime. Mm-hmm. To use it to keep prices low, that's very bad. That's a very bad policy. But that's what they're doing. And so, there's so many factors going on with this. And by adding more green energy, and the U.S. is going to add more wind and solar, we're going to get into the same problems that Europe is getting into, because Europe is cutting coal and they're adding wind and solar. Well, if the wind would blow high speed 24 hours a day and the sun would shine for 24 hours a day, and then those units would last for 1,000 years, then wind and solar would be renewable. But they do not. The wind does not do that. The sun does not shine for 24 hours. And then the wind stops, especially during the summer. And then because you've added so much wind and you've cut coal, now you have to bring on natural gas to supplement the loss of the wind power. And the more wind you add, the more wind falls, the more that's the reason why Europe's gotten so much trouble. And so the more we add green energy, Dave, the more disruptive it's going to be to all the electric grids in the world. And
the more vulnerable we make ourselves.
The more vulnerable. And then the problem is, when that wind turbine is put up and erected, it's got about a 15-year lifespan. Mm-hmm. You might get a little bit more out of it, but you got 15 years and then you got to replace it. Well, if energy production really starts to decline, you need fossil fuels to make that wind turbine. You can't make a wind turbine from wind turbine power, because you need these huge tractors and front loaders and excavators going into mines, extracting ore to make a wind turbine. You can't power it with wind turbines. That's fossil fuels. And so this stuff breaks down after 15, 25 years. It's not renewable. Again, people call it renewable. It's not renewable. I call it throwaway energy. It takes 15, 25 years to throw it away, but it's not renewable. And so this is a major factor. The market is adding a lot of this green energy, but a lot of it, when it gets to its lifespan, it has to all be replaced. And so this is an issue that is not taken into account.
Steve, do two things for me. Either A, give me a bit about good news, or B, tell my viewers where they can learn more about what it is that you do.
The good news is, there's two good things. I think people, energy is going to make, the energy cliff is going to make high tech very problematic. So people need to start weaning themselves off high tech as much as possible. Okay. And they need to start doing things more local, regional. And that's actually healthier. Food grown local is healthier. And so the thing is, that's That's a good sign. Another good sign is that GoldCore and what we all do is we are interested in precious metals. Well, the best store of value in the world are gold and silver, because guess what? They store energy value, and they have for 2,000 years. A treasury does not store energy value. A dollar does not. They're IOUs, they're energy IOUs. The same with stocks and same with real estate. And so people, if they understand the problems with energy, they're going to get worse. That makes you to understand why it's important to hold precious metals and not sell them if the price goes up 20%, just because you can get fiat money for it. You need, the precious metals are going to be the store of value. And I see more institutions moving into precious metals to protect wealth. And that's what people are going to have to do, Dave. And in conclusion, the energy cliff, we're going to go to energy scarcity, means the times of building wealth are over for most people. You got to protect wealth. And you can't do that in most stocks, bonds, and real estate. So with that being said, at the SRSroccoReport, I'm on Twitter. I also have a YouTube channel, but we do a lot of content for our subscribers, our paid subscribers. And I go through all these details on how all this is changing, the details of how the energy dynamics are changing in the market. And while years ago, people didn't pay any attention to energy, now it's in the forefront, and they have to understand what's happening with energy and why it's important to be in the physical precious metals.
What I'm going to do is I'm going to put a link to your Twitter, your YouTube, and to your website as well. So anybody that wants to subscribe, and I would highly recommend subscribing, or at least following on Twitter. But for now, Steve and Angelo, thanks for joining us on GoldCore TV. I really look forward to having you back again.
Yeah, maybe at the end of the summer.
Indeed.
How that would be, to see how the situation is played out. That would be great, Dave.
Thanks, Dave. Thanks for watching. And if you want to see my previous interview with Steve St. Angelo, where we discuss the energy cliff, click on the link now. And if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts.